Computer. That's right. Everyone give me permission to record you now.
Yeah.
All right. So I'm so happy everybody could join us this week on the Huddle. Chris Hiebert, if you don't know who he is, I'm going to let him do his own introduction, but he is a fortune builder. I met him at Ignite back, I think in 2019 or even maybe 2018. I don't know, but we met at
18.
Yeah. We met at a bunch of events, and he's great, and he's part of EXP and knows Liz very well, and that's how I made the introduction. So lives in Kansas City. If you need some properties out there, he knows people to go to, and I've been using his connections, so I'm so glad for that. But I'm excited about the program that you're going to talk about tonight, especially because I finished and passed my tests.
Yeah, so
anyway.
like I said, I finished the course and I'm in the same place, so.
I know. Chris took the course too. But all right, without further ado, Chris, just introduce yourself, give everybody a little background, fortune builder coach, genius, communicator, and salesman. That's what I think.
That's a work in progress. That's a work in progress right there. No, thank you. I appreciate you guys taking some time tonight, and it's an honor to hang out with you and share this time what we're up to, because there's some really exciting things happening in real estate. And I always try to surround myself with people that know a lot more than I do and make a lot more than I do, so I can basically have that rub off on me. And so again, my name is Chris Hiebert. I'm pretty much, not quite, I would consider myself a native of Kansas City, but I've pretty much grown up there my entire life. I worked in the mutual fund industry for about 15 years before I even got into real estate. Back in 2012, I made a big transition, got out of corporate and got into real estate. Started out as a fortune builder student and didn't know a thing about real estate, but I read Rich Dad Poor Dad a long time ago prior to getting into real estate, and it haunted me for about 15 years. And so passive income was always one of my hot topics all through my career. I just didn't know how to get it. And so when I found out about fortune builders, me and my dad and my brothers joined as a brand new, small partnership, got started going through the program, learning the investment route, had some great success on our first few deals, started a networking group for fortune builders people in Kansas City. And so long story short, after 3 years of being with fortune builders, they invited me to become a coach in their program with the success that we had with our investment company in KC. And so I started working with investors and agents, and I loved it. I found out quickly I had a huge passion for it because I love to give and share what I've learned. And because it was all stuff I wanted to learn when I didn't know it. So I basically said, once I know some stuff, I want to make sure everybody that I come in contact with at least knows what I know, because I want to be able to give back. And so that's a big part of my personality. My buddy Tina Cliff is also on here. She's my pal here in North Carolina that I helped start some businesses with. And so I invited her to join me. She can attest to that I'm a big giver. And Liz kind of has a feeling for that too, because I actually got to coach Liz and her and Scott early on when they started Fortune Builders. And so I've coached over 1,000 investors and agents across the US when I was coaching at Fortune Builders. Loved it. Started getting kind of burnt out just because I was continuing to progress in my business as an agent and an investor. And so when I started working with EXP about 4 years ago, I built a big, large team across the country, Canada and India now. And so it's been a big passion for me. So I basically coach my team now instead of coaching at Fortune Builders is all I transitioned into doing. And about 4 months ago, I got turned on to a different program that's launching and disrupting the entire mortgage industry across the US right now in a big way. And so I'm even more excited about this program than I've done in anything in real estate in my entire career in the last 10 years. And so it's a huge opportunity for people. And so I've been coaching. I'm a dad, three kids, heavily involved in sports, back on the fitness and health plan. Again, I've lost 35 pounds in the last 3 months, training my butt off in the weight room, having a great time there, getting some muscle back. I'm going to try to get some kind of beach body back here by this next summer. So look out, ladies. I'm kidding. Just kidding.
Congrats. That's awesome.
No, I started
a background to go with it. So you can
So, but no, I started this challenge when I was at 285. I'm down to 250 with a goal to get to 220. So that's where I'm in the middle of that journey right now. So, but we did hit Buffalo Wild Wings tonight and a lot of beer and wings. Tonight was not the night for progress. So Anyway, had a pretty good night. But that's just briefly about me. There's more to the story, but I'll keep it brief. I love to teach, coach, mentor, inspire, share every resource I have. And I built up a lot of good resources across the country. So anything I can help with you guys in real estate, consider me a partner and help you. And then I'll be glad to share the program tonight that me and Liz and Marie and Tina, we're all pumped about and kind of losing some sleep over because we're so excited about it. So that's all I can share about me for the moment.
No, that's good. I just wanted everybody to know who you are and know why I trust you and why I wanted you to come on here and speak to everybody. So it's awesome. I have it. So I believe you can share your screen if you need to.
Okay, perfect. Yeah, I've got some stuff I'm going to pull up here in just a sec. So cool. Let's do that. All right, is that coming through okay? Can you guys see that?
It's about to load. There you go.
All right, cool. I'm hotspotting through my phone because this hotel Wi-Fi is kind of spotty. So I think I've got better connectivity with just my hotspot. So if it changes, they'll let me know. That'll work. So, all right. So what I'm going to do is give a little bit of background as to what's going on. So, and then I'll go through and explain this model. And the model itself should only take me more than 15, 20 minutes tops. And so, but just the history backing into this is what's critical to get. So when I started out as a brand new licensed agent, I originally hung my license with Keller Williams, and I had an awesome experience there. I was there for 5 years and learned a ton, met a ton of people, built a huge network, and just had an overall great time. And I kept hearing about this company called EXP Realty. And after about a year of hearing about it, I finally took a look at it. And I got to tell you, I was shocked at what I saw. It really was monetarily a big difference in what I was able to accomplish from KW. And for that matter, any other real estate brokerage that I looked at, it was a much bigger difference than what I saw in other places. So it took me a couple of weeks to kind of kick the tires on it and really see if it was something I could do. So I made the change, went over to EXP and started selling real estate and built a big network, built a passive income stream that I basically make 5 to 6 times more in the passive income from EXP than I make from my entire rental portfolio combined in Kansas City, and without the headaches of having rentals. And so I'm really big into passive income. So I've been here for about 4 years so far. And then about 4 months ago, I started hearing about this program called the RELO program. And the history of how RELO started was when there was a gentleman by the name of Gene Frederick, who was literally Gary Keller's right-hand man at KW. He owned 6 of the most profitable franchises that KW had to offer in the United States. He was also one of their 32 regional owners. And so when he saw the EXP model, and this is not an EXP talk, by the way, I'm giving you the history of how RELO came about. And so when Gene saw how the EXP model was working, he decided after 5 months of kicking tires on it, that he sold all of his franchises to KW, sold his region, and decided to come join this company that had 400 agents across the entire country at the time. Nobody had heard about it yet. So when he had his kind of coming out announcement that he was leaving KW, come to EXP, he got all of his top kind of financial buddies together, kind of his inner circle of guys, got those guys together and announced he was leaving KW, come to EXP. One of the guys that was sitting at the table listening to Gene share this story was Eric Bowlby, who's the CEO for Amerifirst Financial, that's based right there in Phoenix. And actually in Gilbert is where they're located at. Eric's sitting here taking all this in, going, this is really impressive. You've got this referral structure that KW built that helped them become the largest real estate brokerage in the world. And then you've got this company called EXP Realty, who's nobody's heard of yet, but they modeled a similar structure after KW's profit share plan, and they created a 7-tier referral structure for what they call revenue share. And so Eric spends the next 3 years watching the growth with EXP, and it's become the fastest growing real estate brokerage in the history of real estate. And so after 3 years of watching this, he decided, you know what, I think, why hasn't anybody created a model like this in the mortgage space yet? So I'm going to build it. And so 3 years ago, he started and launched this program called the RELO program, which is hosted and run through Amerifirst Financial. And so RELO stands for Real Estate Loan Officer. And you heard these guys talk about taking a class and passing a test and that kind of stuff. Most people, when they think about taking a class and having to pass a test, that doesn't sound very sexy or exciting at all, for that matter. But when you see the numbers behind it, you'll understand that that's kind of a formality, because the income behind this is absurd. And the networks that we've built are significant, that we could easily overlay what's happening with this model and carry this into our businesses to create multiple additional income streams on stuff that we're already doing today. And so I'm just going to kind of go through some of these slides. If you guys have any questions at any time, please, by all means, stop me. This is your time. I'm happy to answer any questions as we get through it. But just like how Netflix has disrupted the Blockbuster, the whole movie rental industry, technology was a big driver there, streaming video. Amazon, look what they've done to the retail industry. They've blown away Toys R Us here, Circuit City. I mean, everything has changed because of the common denominator with the internet's been able to do between Amazon and how shipping and shopping has changed. EXP, they've disrupted the real estate brokerage world. When I started with them 4 years ago, they were only 4,000 agents. And today they're almost 70,000 agents 4 years later. They're going to be larger than KW by the end of next year. That's how fast they're growing. They'll be the largest real estate brokerage in the world in about a year. And couple that is Amerifirst is now disrupting the mortgage industry with the RELO program that they invented. And so he basically modeled what you saw with KW's business model, EXP's business model, and built that and pulled that into the mortgage industry. So here's how the two income streams work. If you're a real estate agent and you refer, well, let me ask this question. How many, let me look here really quick. How many people on this call have their real estate license?
I do.
Do we have a couple? Okay. Do you actually use it to work with buyers and sellers or just strictly investing?
Both.
Both? Okay. So let me ask you a question. On the buyers that you work with, have you ever referred a lender to them or did they already have a lender that they were working with?
Oh, I refer people all the time to the guy I work with. Yep.
Okay. So on those referrals you get, what do you get paid on those referral fees?
Zero.
Zero. Well, with this model, you now, if you do it through this program, can get paid 0.5% on all conventional loans that you refer now through the end of your real estate career. Paid up to $2,500 per referral fee per conventional loan. About 80% of the loans done in America today are conventional loans. So you're talking about 4 out of 5 loans are conventional. And you can get paid 0.5% up to $2,500 per loan referral. That's just on, go ahead.
So I'm not actually, I'm still just referring to Amerifirst, or I'm more involved in it than that.
If to get paid the 0.5%, it's going to be referring to a loan officer that's with Amerifirst.
Okay.
And here's the cool thing is we can also invite your favorite loan officers to come participate and be a part of this program. So you can still refer to them, but just do it through here.
Even if it's a mortgage broker?
Even with mortgage brokers, we've got mortgage brokers that come on and are a part of this.
Okay. Cool.
It's a little more complex. And so there's a different conversation that Eric, the CEO of the Amerifirst, would have with them to talk to them about how they can help them make it work. Because it would be under Amerifirst umbrella because this is the only company out there doing this. So, but the premise is if you refer any loans through this program, you're going to get paid 0.5% on any, this is on your personal loan referrals. Okay. Now, some of you sitting here going, well, I'm not a real estate agent and I'm not referring loans to loan officers. Do you happen to know real estate agents that do? If you're in real estate investing, then you probably know 1 or 2 real estate agents, I'm guessing. Okay. So there's 2 income streams. One is your personal referrals, 50 basis points or 0.5% on all your personal loan referrals. And by the way, this also applies to refinances as well. So if you refer somebody wanting to refi their house, or maybe it's an investment property, they want to get a better interest rate, and they refer that investment property, they can also do a refinance and get paid 0.5% on the refi as well. Just to put in perspective, it's new loans and refis. Then on top of that, they built the same tier structure matrix that KW has and EXP has. They built it into the mortgage space. So if you refer other loan officers or refer other real estate agents or other types of loans, they're referring to the loan officers. There's a passive income stream you can get created with this that can get into a multiple 6-figure passive income structure for you based on what other agents in your network are referring through this model, whether or not if you refer one loan or not. Okay. So stats about the mortgage industry as a whole, there's 17,000 loan officers just between Texas, Florida, California, and your home state of Arizona. There's over 200,000 loan officers just between those 4 states, very concentrated in those 4 states. The average LO makes about 63,000 a year. 10% of those make over 100,000 a year. 1% makes over $500,000, and 0.01% makes over $1 million a year. Here's the interesting common denominator. None of them are making residual or passive income in this industry. None of them. As my buddy Louis Rios says, he goes from hero to zero on every closing. He has to start over all the time, every time. And so it's kind of like this. You're nonstop on a hamster wheel. Whether you're a real estate agent, not making passive income, you're a loan officer, not making passive income, or if you're strictly as an investor, just fix and flips and not have any passive income, this is what your life looks like. You're on a hamster wheel. I'm seeing some heads bobbing. So, because I've been there, done that, and I know what it's like. So that's why for me, passive income is such a big deal. And the more different opportunities you can see on how to create more passive income streams, this is how you really start to set yourself apart from the pack. Oh, I forgot. That's the video version. Can you see the video? I was at a pet store and I'm like, oh, this is going to be great for a presentation. I got to get this. All right. Hey, you got to move on here. There we go. Okay. So right now, Amerifirst, they're one of the largest mortgage companies in the US. They've got actually today, they got over 700 loan officers around the US. They did $6 billion in loans last year. This year, they're on track to do about $20 billion in loans. Their two-year goal is to be in the top 20. And within the RELO program, their goal is to become the largest mortgage company in the US in the next 5 years because of the RELO program. I think with the growth they're experiencing with this, I think they'll do it. So they're on track to do this in 5 years.
Did Chris freeze for everybody else or just me?
Yeah, he's frozen.
Here's how you get through the licensing and compliance side of this. Somebody have a question?
No, but you froze up for a minute there.
Oh, what was the last thing you heard me say?
Go back a slide.
It was the last part of the hamster, I think.
So did you see this slide?
That's the last one.
Okay. So Amerifirst is one of the largest mortgage companies in the US. They've got over 700 loan officers today. Actually, this 400, it's actually 700. It's almost doubled their LOs. Last year, they did $6 billion in loans. This year, they're doing over 20. And their two-year goal is to be in the top 20 companies in the US within the next 2 years. And then their 5-year goal is to become the largest mortgage company in America, even past Quicken Loans and Rocket, because of what they're able to do and leverage with the growth they're experiencing with their RELO program. So this is the game changer disruptor to the mortgage space. And right now, they modeled it after the two fastest growing companies in real estate history, KW and EXP. They introduced the first multi-tiered structure in the mortgage industry. And it now gives real estate agents, loan officers, and other entrepreneurs in the real estate space, like you and I think real estate investors, once you see the numbers on this, it's mind-blowing how these numbers explode. So let's get into it. How do you get compensated? Because this is a heavily regulated industry. So Brooke, just like as a real estate agent where you're at, and if you guys want these slides, I'm happy to send them to
I've just been taking pictures.
Liz, or maybe Liz already has it. I think I already sent it to Liz, but I can send it to both Liz and Marie, and they can send it out too if you want everything that I've got, so you can go back and review it later after we're done tonight. Happy to do that.
Yeah, it's
So
great, Beth. We could stick it in the Huddle group. Marie can stick it as a document in there.
Perfect.
Yeah.
And so Brooke, you're a licensed agent in Phoenix. And so if I had a client moving from KC to Phoenix, I could call you up and say, hey, would you pay me a referral fee if you help close a loan for him? Would you pay me a referral fee?
Absolutely.
Okay. 25% is pretty common around the industry. And so that's typically what I ask for. And I get referrals all the time across the country for KC. And so how I can get paid a referral fee and you take care of a client is you got to be licensed and I've got to be licensed to get paid a referral fee in the real estate sales side of things, right? So no different in the LO space. In order to get paid a referral fee from an LO, you have to have a license as an LO in order to get paid a referral fee. And so rather than taking 70, 90, 100 hours of class time to become a real estate agent, what Amerifirst did is they said they partnered with a company called Mortgage Educators and developed a 20-hour course to take so you can get your NMLS certification so you can legally and RESPA compliant get paid a referral fee in the mortgage space. So it's a fraction of the time, and the content, I can tell you, is much less strenuous than what I thought it was to get a real estate license. So, and this license you're getting is strictly so you can get paid passive income referrals, not to go originate loans or to go underwrite and have to process loans. It has nothing to do with that. All you're doing is getting paid passive income. You're like an affiliate marketer legally to get paid income through this model, okay? So 20-hour course. Once you take the course, pass your test. Great job, Marie. Proud of you. Way to rub it in my face. I'm feeling it. And let's see. Once you become active, then you become a W-2 employee for Amerifirst. You're not a 1099. And what I think is interesting about this is investors, real estate agents, we're all 1099, right? And how easy is it for us to get loans when we're only 1099? Not as easy, right? I'm chuckling under my breath when I say that. But bottom line, you get W-2 income from this. So I love this because I get 1099 income as an investor and as an agent, but now I get to add W-2 income to my plate. That's basically like working like a 1099 rep, but getting paid W-2. So now I can start building a better, solid financial picture to get loans easier because I can be W-2 through Amerifirst. Now, once you become active as a W-2 through them, you get a custom link that's specifically tied to you. Rochelle, did you have a question? I see you got your hand up.
Yeah, sorry, I was trying to hit the mute. Quick question. So I'm navigating all these thoughts on, eventually my husband getting out of W-2 and all that, and insurance keeps coming up. Is there any insurance with that W-2 income through them or no?
I'll text our CEO really quick and ask him.
That's just something I thought might really bridge a huge gap. It seems like for so many, investors wanting to finally make that break is the insurance issue.
That's a great question. What I can tell you is EXP has really good health insurance through their program.
Okay.
I'm saving $22,000 a year getting off of Blue Cross Blue Shield and moving my plan to EXP this last year.
Interesting. Good to know.
So
Thanks for sharing that.
it's a big deal. So I know I get it through EXP. I'm texting
Okay.
our CEO right now. I'm really good buddies with Eric Bowlby there in Phoenix. Up and see if there's something possible through there. We'll see if I can get an answer while on this call.
Yeah, no worries. It was just a thought I wanted to get out there before.
I haven't asked the question, but that's good to know. That would be nice to know if that's an option. So there might be, because we are W-2 through the company. I don't see why we can't sign up and get on their plan, would be my hunch, but let me get confirmation first. I'm also really good friends with the head of HR. She's their chief people officer through. And Liz and Marie know her. We like Renee, right?
Yeah, I was gonna
She's,
say you should be texting Renee right now because Renee would be on it. She might be
I'll
out
ask
the bar
her
with
too.
the drink, but she's answering her phone. I promise you.
She's got her laptop at the bar. Are you kidding?
Yeah.
Well, and I don't mean to derail your presentation. I just thought that might be
You're not.
something that, I don't know.
Michelle, that was a great question. Don't
I
worry.
love that question. That's good to know.
Thank
I
you.
just texted Renee too, so we'll see what either of those two come back with.
Oh,
No problem. I love the great question. That's something I'd like to know for future anyway, so it helps me get better at this too. So thank you. So once you become active, you get a custom link, and that link is tied to you and whichever RELO loan officer, Amerifirst loan officer that you would like to have receive the referral business. So let's say, Brooke, you got a buyer. They want to get a lender. Great. You give that buyer your link, and that link is tied to an LO of your choosing at the other side of that services your loan referral business. So once you give them the link, they fill out an application, goes right to the LO services them just like you referred them, okay? Once they close that loan with them, you get paid 0.5% on that loan amount, as long as it's a conventional loan, up to a $500,000 loan amount. They can do any kind of loan you can imagine. They can do any size of loan you can imagine that the buyer's approved for. They cap the referral at $2,500 per conventional loan, which is a $500,000 loan amount. So even if they do $1 million loan, you're still going to get $2,500 on it. Make sense?
I'm needing a pre-qual pretty quick. If you're just giving them a referral code, how does that help?
I heard part of your question. Would you mind repeating that again?
most of the time I'm needing a pre-qual pretty quick. So if I'm just giving them a referral code, how can that help?
Well, so what's going to happen is when you give them your link, they're going to go fill in an application. It takes like just a couple minutes to fill it out. That's going to immediately connect them to the LO, and the LO runs their information to get them pre-approved. It happens pretty quick.
Yeah, okay.
And so how do you build rapport with a loan officer to like, who do you pick? And, you know, you want to make sure they do a great job and great service.
Absolutely.
Your name's kind of on that as well. You're referring someone. So like, how do you do that?
No, that's a great question. And like I had Randall come speak at the lunch and learn that I did in Phoenix a couple of weeks back. And this guy is an absolute stud. And Liz, I think could attest that he was very impressive. He's a solid loan officer. So we can make introductions to people. And then the other thing too is if you have a favorite LO that you like today, we can share this model with them and bring them here. And then you can continue to work with them through this model.
I do have to say their loan presentation was amazing. And I was super happy with that company, what they offered. And just even the one gentleman, Randall, that we met, what all he presented and what his team does alone. Like this, the concierge service that they have, his assistant. I mean, before he left the building, she'd already sent me messaged me back on stuff. But anyway, they have really good loan programs. And Brooke, did you talk to them?
Yeah, I did talk to Randall. And I really wanted my client to look at it, but they didn't have any, unfortunately. My client would like to read something about it, like, okay, I need to visually see this to understand it. And they don't have anything like that yet, unfortunately. So
To explain the loan products or what?
So they have a program, which you're probably familiar with, that they'll actually, if I have somebody that's needing to move into another home, they're trying to sell their home, that they'll actually buy the home from them so they can relocate to the next home without having to, have a lot of messiness in between.
That's that
You're talking
program.
about, that's the trade-in program. Yeah. That's where they'll buy their home from them at 90% of the value.
Yeah. But they don't have anything like this. They don't have a presentation. They don't have anything in writing. They don't have anything yet.
So they launched the program this year. And so their marketing department is in process to get that built right now. It's in
I
process.
think he launched it like 6 weeks ago. I mean, he was 4 weeks when he was here. And they already had
It's pretty new.
135 people in the program. So
Yeah. It's new. He's got a $400 million line of credit to go buy real estate right now.
Yeah, but Brooke, would your client be good to just get on the phone with someone over there to talk to them about it? Or do they just need to see something like in writing?
He probably would. He didn't offer. He was getting ready to go out of town for a week. So that's kind of where we left it. But he probably would.
So what I would recommend is just get one of the LOs on the phone with them that can explain it and talk them through it and just connect them and let them just have a conversation about it. That's what the best idea I can at least put out there for this moment. And then I know that I can talk to their head of marketing. I met when I was in Phoenix that they're in the process of building all that right now. So that will mature in terms of the communication structure about it. It's just so new that they're catching up to what's been implemented in terms of loan product options for them. And I'm going to explain more about those programs here in just a minute. Once we get through the RELO portion, I'm going to explain the 3, what I would call like the silver bullets of their loan products, are just cutting edge compared to what most lenders are doing in the industry. They're really outpacing a lot of lenders today with some of these products they're creating. Yeah, it's that trade-in program will solve the inventory issue we're having in America today. It's really cool. So, great question. Any other questions before I move on? Good for now. Okay. So once you send them your link, they fill out the application, LO connects with them, gets them pre-approved, go through the normal process of getting the loan fully underwritten and approved so they can close on the property that you're helping them buy. Once they close on the property, because they went through your link to get their mortgage application and loan, then you get paid 0.5% through Amerifirst once they complete the closing of that property. Okay. All right, so here's a question for you guys. This is not a trick question. So just think about it and let me know your thoughts when I ask this question. What would you rather have today? Would you rather have $1 million in hand right now? Or would you prefer to have a penny a day, double a day, but only for 30 days? Which would you prefer to have? Feel free to unmute and shout out. Penny, says Brooke. See, if you already know this, then you don't get the answer. Liz, Marie, you may already know. You kind of got a little smirk on your face. Let's see. Wendy, Janeth, or Roberta. Who else we got? Elda. What are your guys' thoughts? Anybody want to mute and shout out?
I'll do the penny.
Penny.
Yeah.
Okay. Anybody else? Any takers?
Must be a trick question, but I think $1 million.
Okay, you take the $1 million. There's not a right or wrong answer here. It's just which one do you think is going to give you more money? All right, so here we go. Ready? After 15 days, you've got $163. You're halfway there, and you only made not even a couple hundred bucks. Okay, by day 22, you're up to almost 21,000. Still feeling good about the penny, or would you rather have the $1 million?
Feeling good about my penny.
All righty, let's keep the pennies on the table and let it ride. By day 30, 5.3 million is what it's compounded into.
Holy shit.
That's the power of compounding growth. Now, I'm big on extra credit, so let's just go day 31, 10.7.
Who said holy
Guys.
shit, by the way? That was great.
Not me, sorry.
I hit a button and it said, I'm kidding, wasn't me. But guys, that's the power of compounding growth. Okay, this is, remember, if anybody ever talked to a financial planner, if you stuck $2,000 in a mutual fund like 40 years ago, what it turns into after 40 years without adding any more money to it is insane. That's compounding growth is what that's about. This is the same thing. So when you see the passive income structure with this, I want you to be remembering what it's like to double a penny every day, because it's a concept that gets into the framework of compounding growth. All right. EXPKW has a 7-tier referral structure. They copied the same thing and built it into the mortgage industry. So this is how this works. Let's say I'm going to pick, let's just say Marie, since she's got her test done, she gets to be my guinea pig on this conversation. Okay. So with Marie, let's say she's up here on this kind of hovering area. I'm moving my mouse in, and she refers somebody to the RELO program, and anybody she refers is going to be on her what we call level 1. Any person that she refers on her level 1, when that person refers and closes on a loan, not only does the person that referred the loan get paid 0.5%, but Marie, because she referred that agent that referred the loan, gets paid $100 out of that loan. She had nothing to do with the loan. All she did is refer a person, and she got paid $100 out of it. When you look at these dollars, I didn't get too excited when I saw $40, 140, 100 down here. I was like, that's not a lot of money. So why is everybody so excited about this? Well,
Chris, you're freezing up again.
He was right at the good part too.
I know.
Such a tease. He like rubbed the oil on and then said, "This is the good part," and walked away.
You're being recorded, Marie. Just remember that.
Thanks for the reminder. Oh man, see if I can message him. Chris, you're frozen.
He's
What are
trying
you
to get back
eating,
there.
Rachel?
Rochelle.
Rochelle, what are you eating, Rochelle?
Oh my gosh, my daughter's got these crumble cookies. Do not try them. They're like crack. This is a Rice Krispie one, which I'm like, oh, I haven't had a Rice Krispie treat since like college. My old roommate used to make them. Anyway, okay, I think he's unfrozen. Are you unfrozen, Chris?
Chris, are you back? Okay, but you're muted.
that better?
Yes, that's better.
Woohoo! Yeah, my
It's like
internet.
you literally
my-
got to the best part and then froze. You were like, okay, so $100, $140, $40. That's not too exciting, but
I love it. All right. So, but what they did is with the money that's coming in out of that $900, 500 of that they put into this 7-tier structure. That's where this money is coming from because they're already spending dollars on marketing. Now, when they went back and talked to their research department and said, where is most of our loans coming from? They said it's coming from agent referrals. So why don't we take some of this marketing money and put it directly in a budget for agents to get paid directly from us on this legal and RESPA compliant? And they mirrored it after the 7-tier structure from KW and EXP. So as you look at these dollar amounts, again, I wasn't too excited about the numbers, but when you see the progression of growth with this gets into multiple 6 figures for you. And this is what I'm excited about. Now, how you get paid on each of these tiers, you see this column over here, it says 1 RELO agent, 5, 7, 10, 12, 15, 20. What this is saying is anybody you personally refer through this model, every one of the people you personally introduce and refer to this, not just on your own with my help and some other leaders help to help you do this. We help you do this, actually present it for you. You will always have that person you personally refer will always be in your level 1. And if they refer somebody, that person's going to be on your level 2. And if that person on level 2 refers somebody, that's on your level 3. So as this is growing organically, locally, hyper-local, local, national, all across the country, this starts to fill in on your matrix through this system, through the platform we put together. To get paid on each of these tiers, what this is saying is, you want to get paid on tier 2, you have to have 5 RELO agents on your tier 1. If you want to get paid income on tier 3, you've got to have 7 total RELO agents on your tier 1. To get paid on all 7 tiers, you have to have a total of 20 RELO agents you've personally referred on your tier 1. If you know anything about the EXP model, you have to refer 40 agents on your tier 1 to unlock all 7 tiers of the EXP. A different structure for KW's profit share. But there's, as you grow in your personal referrals, you're unlocking the income below you on different tiers. That's the concept. So let me give you a hypothetical. Let's say over the next year, 2 years, time is irrelevant because you can do this in a month if you want, if we get aggressive and do it fast enough. But let's say over the course of the next year, you personally refer 10 agents, hyper local, local across the state or nationally to this program in your network. Let's say these agents on average are referring 12 transaction loans per year. So 1 a month. Some can do more, some can do less. I know agents doing 200 to 300 referrals a year. So this is fairly conservative at just 12. Now keep in mind, this can be new loans, a combination of new loans and a combination of refis. If you go to every real estate agent's database of agent or customers that they have in their database over the years, they can now go back and market to their entire database for those that need to get refied and help them get refied through this program. So they could do 6 new loans a year and 6 refis a year and do 12 a year total, 1 a month. So you refer 10 agents and we help them on average refer 12 deals per year. That's 120 transactions coming through. You're getting paid $100 per deal. That's $12,000 in extra passive income to you just on the side. We show a progression of growth because of the penny a day, double a day concept, compounding growth. Marie has a network of people I don't know. Rochelle has a network of people I don't know. Brooke, you have a network of people I don't know. So we help all 10 agents over the next year help them also refer 10 from their networks each. Well, 10 times 10 is 100. Let's say 100 on level 2. That's 1,200 deals coming through just your level 2. You get paid $140 per loan referral. Am I still coming through okay? Because it says internet connection unstable. Am I okay? Can you hear me?
Yeah, it stopped for a minute, but it came right back.
Okay. So what this is showing you, just again, this is a hypothetical. Math never works out exactly like this. I just want you to see what the potential looks like. We help all 10 refer up to 10 agents each per agent. That's 100 on your level 2. Let's say they're averaging on average 12 deals a year. Some could be more, some less, but let's say average across the board, 12 deals a year. It's 1,200 deals now going through your level 2, but you get paid $140 per deal through the marketing budget. That's another $168,000 you're getting paid just on level 2 plus 12 on level 1. That's $180,000 a year passively to you. Just from referring 10 that referred 10 each, that's averaging 12 deals each per year. Now, each on average. Well, take 180 divided by 2, you're still making 90,000 a year. What if they're averaging 24 deals each per person? Well, take that and double it. It's 360,000 a year. I just want you to kind of grasp the magnitude of how kind of dollars are behind these budgets, because this is happening across the industry today. It's just we're redirecting dollars that are already in marketing budgets today and putting it in the hands of people that are doing the word of mouth advertising. So this is just a quick hypothetical. This page, to me, this is the secret sauce. This is the magic. Let me give you an idea of what's happening here. I'm gonna stick with Marie because she's the one that's already passed her test. She's ready to rock and roll. So let's say, Marie, you want to get paid. You don't want to leave any money on the table. You want to get aggressive and get paid all 7 tiers. So to do that, you got to refer 20 agents on your tier 1. So let's say you refer the
He's frozen again, isn't he?
Yep.
Another thing I got to mention too, when you look at the yellow columns on this chart, this is the person that's doing the passive referrals. This is the income for that person. Somebody has got the custom link. Somebody's a loan officer servicing these loans on the back end of these loans coming through. The blue column is what the loan officer is making. So as I'm going through this, do you want to be in the yellow, or do you know people that would want back your mind as I'm going through these numbers? And also, please keep in mind, this is a multi-trillion-dollar industry we're playing in right now, where we get to share revenue now. So these numbers get very large. These are not little numbers we're going to talk about. These are huge numbers we're going to talk about. So let's say we have 20 agents on Marie's tier 1, averaging 4 transactions per person per year. That's a total of 80 transactions going through this matrix. You're getting paid $100 per loan referral. That's $8,000 in compensation to Marie passively. Okay. Now, let's say the average loan amount that's coming through is a $250,000 loan. Is that high, low, or average for your market in Phoenix?
Oh,
Pretty low.
That's low, pretty low. So the numbers I'm going to go through this example, you're going to understand is already below par for you right now. If I adjusted this chart to be your average, I think is around 400,000, then you can see these numbers are going to be even higher, is my point.
Chris, when you say agents count number 20, does that also mean if it's a loan officer already, is that counting the agent count, or does that count somewhere else?
This is hypothetically, if we just are referring agents on this section over here. Now, what's interesting is you could be a loan officer also referring agents in this matrix and making the passive income side, and you could also be servicing the loans, making the active income side on the blue. So you could refer a loan officer. I'll segue for 1 second about a loan officer. When you sponsor a loan officer, that's considered a ghost position in the matrix. So you don't get paid on all the loans they're processing. You get paid on the loans that are referred into the matrix. So, but think about how many real estate agents does the loan officer know? A lot. So what if they refer their agents and filled in this matrix with 100 agents? Let's say you sponsored a loan officer on your level 1, and that loan officer refers their 100 agents that they can now legally and RESPA compliant pay them a referral fee for bringing them loans that are loyal to them.
Yeah, that's true. Think about
Does that make sense?
Yeah.
So you're not getting paid on the loans they process, okay? But you're getting paid from the referral network that they bring in that are also referring loans.
So
Did that sink in?
how compatible is Amerifirst? I mean, we have a fiduciary responsibility to our clients to, get them the best loan,
Yep.
basically.
Absolutely. They're just as competitive or even more competitive than what's in the industry. And when I go through some of their loan products, you'll understand what I'm referring to when I say that.
Right.
So you'll see. They're very good. I mean, their service and rates and loan product compatibility or strength, they're top tier. This doesn't work if they don't have good products to put out to the market.
Okay.
So they're very good quality. So let's say we have, to finish up this tier 1 example, we got 20 agents that Marie referred. They're averaging 4 deals each. That's 80 transactions times $100 per transaction. That's $8,000 in compensation to Marie. Let's say the average loan coming through just for this example is $250,000. Well, 80 deals times 250 a piece, that's 20 million in production is coming through that matrix for that loan officer receiving this business. Now, keep in mind, the average loan officer in the industry gets paid 1.5% commission on the loans that they do. Okay. Over here, it says 1%. Reason why it says 1% is because they're taking 0.5% of that and giving it to these 20 agents as a thank you for the referral business. Does that make sense?
Yeah.
Okay. When a loan officer sees this, if they're not looking at it through the right lens, they're thinking, well, I'm taking a pay cut. What did the LO do to go get this business?
Nothing.
Nothing. Brooke, if I send you a client that you're able to close a deal with, you're fine with paying me referral fee, you said earlier, right?
Oh, yeah.
This is the same thing for the LO. They didn't do anything to go get the business. All they did was say, yeah, I'll be your guy. I'll be your girl. That's all they said. This is an additional pipeline to their existing business today, something they didn't have before. So LOs make a big mistake if they're not looking at this through the right lens. It's like timeout. You just got 20 million in production for doing what? You follow me?
Yep.
So at 1%, that's an additional $200,000 in income to that LO. That's 3 times the national average because of your referral matrix. Not bad for that LO, is it? Well, we talked earlier about a penny a day double today. So I'm going to work from a compounding growth of a factor of 2. What if these 20 agents that we referred through on Marie's tier 1, what if all 20, we help them just refer 2 friends each? And we all know they know a lot more agents and LOs than just 2, but I'm keeping this very conservative. What's 2 times 20? It's 40, right? So now we got 40 on our level 2. What if they're averaging just 4 transactions a year? Well, that's 160 loans that came through just on level 2. You get paid $140 per loan. That's $22,400 in your pocket as the referrer, Marie. Plus you're getting $8,000 on tier 1. That's $30,000 in income to you now, just on the referral side of this. Well, if the average loan coming through all 160 deals averages $250 a piece, that's another 40 million in production to that LO getting these loans. At 1%, that's an additional $400,000 income to that LO plus $200,000 on tier 1. They're making $600,000 in loan amount at this point. They've got 240 transactions coming through a year because of your referral network that came through. That puts them in the top 1% in the country. And what did they do to go get this business?
Nothing.
Nothing. Is there an LO that you have in mind that might like to see that income in their bank account?
Yep.
Okay, let's take a step further. Progression of 2, penny a day double. 40 refers 2 weeks, that's 80 on tier 3, averaging 4 deals. That's 320 transactions compounding. You're getting paid $40 per transaction. That's another $12,800 plus 22 plus 8. That's $43,000 in income to you, Maria, as the referrer. How much time did you put into these loans? 0. How much paper did you collect on those loans to get them approved?
0.
0. 43,000. How many rental properties to get 43,000?
A few.
A couple, right? What kind of headache did you have in this matrix so far compared to getting $43,000 in rental income? What's that difference look like to you?
A lot easier.
Okay. Not that it's wrong or right. It's just another opportunity. That's all it is. It's just an opportunity, guys. Now we've got 320 transactions coming through times $250,000 loan amount a piece. That's 80 million in production just on tier 3 for that LO. 1%, that's $800,000 in income just on 3. 400,000 on 2, 200,000 on 1. That's $1.4 million in income. Now, This one individual loan officer is not doing this by themselves at this point. They're scaling their team. They're growing a team of loan processors. They're going to have a salary. They're probably going to pay 2 or 3 loan processors to help them with the business. So they have a gross income of 1.4. They might carve out 1 million. Any LOs come to mind that might like to see that? Any agents that come to mind that might like to see this side? Okay. So far, we're compounding by 2. I mean,
I think Wendy said she wants it. When Wendy raised her hand, she said, I want that.
Well, smart gal. I'll acknowledge that. So I'm going to unlock all 7 tiers, but I want you to just understand, guys, these numbers, who was blown away by 5.3 million on the penny a day double today? I was too when I first saw it. Just understand this is the same gut feeling you're going to have when you see these numbers, because we're compounding by a factor of 2 each tier. There's 160 million in production. There's 320 million productions on that tier. By a factor of 2, you've got 20 agents in your 7-tier matrix doing 10,000 transactions a year plus. You're netting as a passive income $734,000 a year in passive income at this point. The loan amount coming through is 2.5 billion in loans coming through. At 1%, that's a gross of $25.4 million to the loan officer that started with you on this journey. The team they're going to have in place to support this business is 43 loan processors that they've been adding and scaling to their business over time, averaging 20 loans per month per processor. That's 240 a year. It's a full-time processor. They're getting paid $10,000 per month, $120,000.
Chris froze again.
When did I freeze up? Can you hear me now?
I can hear you now. I just at the last part. So after you.
So talking about the team. So when you have, as this has grown and matured over time and scaled, the team that's going to be in place is 43 loan processors total to support this business. The average processor does about 20 loans per month, or 240 a year. Their income is 10,000 a month or 120,000 a year per processor. Your payroll for this team, this is for the loan production team that's supporting the referral matrix. Their payroll is about 5.1 million for the staff, the managers, all the loan processors to get in place. The Rainmaker LO that started this journey with you is netting $21 million a year at this point. Now they're busy. They've got a large team they built, but this is like a mortgage team, mortgage company inside a mortgage company at this point. And keep in mind, this is a multi-trillion-dollar industry. So 2.5 billion sounds like a lot, and it is. But when you look at the referral compensation that's taking place, we're literally shifting dollars in traditional mortgage industry, disrupting it like Netflix and moving it to this pattern. And this is taking over like wildfire across the country. Eric Bulby, a buddy of mine, he's the CEO, he's my buddy now at Amerifirst. He did a Zoom meeting for some agents that had 1,600 real estate agents in one Zoom meeting. And Eric did the presentation for that entire group of people. All 1,600 joined that month in the RELO program and from one meeting. This is growing so fast because this has nothing to do with the XP. I want to be clear about that. This crosses all broker boundaries across the entire country. There's over 2 million licensed real estate agents in the US. There's over 560,000 loan officers. Again, nothing to do with the XP here. I've got agents on my team from KW, Coldwell Banker, Reese Nichols, which is a regional broker here in the Midwest. We got people at Remax looking at this, talking to broker owners that want to roll this out through their entire groups of agents across their entire platform. I mean, this crosses boundaries all over the place. So when you think about, if you made a list of all the real estate agents and loan officers you knew, that's the initial audience to market this to, that they could take part with this, okay? If you guys want to see the live presentations, I participate in some of these sometimes, but some of the top income earners across the country do this on a every twice a week basis. So you're in Pacific. So on Tuesdays at 2 p.m. Pacific Standard Time, they're doing a weekly presentation on this. If you text RELO to that number, then you'll get notified on how to get the Zoom link to those meetings. And then every Thursday at 9 Pacific, they also do the same presentation every Thursday. So every Tuesday and every Thursday, you get to see this. And so all I've been doing is inviting agents and loan officers on my network to these meetings, and they've been joining like crazy. So I've already personally sponsored 30 agents in the last 3 months on my tier 1, just from sharing this concept with them, inviting them to these meetings. Those 30 agents have already turned into almost 70 in the last 3 months. And so this grows really fast. There's people out there sharing this, whether if I'm there or not. It's already growing organically with or without me. So it's compounding without me at this point. And so whoever invited you to this, that's basically who would be your sponsor.
That's me.
If you know loan officers, he's the key. I would consider him more of a master at talking to loan officers.
I said in me, but I think I was muted. So that would be Marie, and I invited you. Chris, you're going to have to watch there.
Well, hey,
So,
however you two want to work that out, I'll let you put your scent on whoever you want to claim here. I'm not going to work that part out. So, but you guys can work that part out. But yeah, whoever, however you want to work that out, totally fine. We're all one big team working together in this stuff. So have to present on yourself. I will be happy to do this for you all the time, every time, 24/7. And then not to mention, we have the group meetings we're doing every Tuesdays and Thursdays. You can invite people to as well. Your job basically is to get your course done, take your test, and invite your network to hear about it. You don't have to be like the presenter or have all the information about it. Just invite them to come learn about it. And then as they learn about it, I kind of liken this to, like, this is one of the really good movies you've seen before. Uh-oh, it says internet connection unstable. Can you still hear me okay?
I can hear you.
Okay, cool. So think of this as like a real, you get all of it? Did it stick? Or when you watched it a second time, it was like, oh, I didn't know that happened. That's pretty cool. And it kind of gave you more flavor about the movie, right? Well, by the time you saw it a third and a fourth time, you really got the whole movie finally, because there was so much to it. This is no different. I highly recommend see this a second, third, and fourth time, because it's worth your financial future to do it. Whether or not, if you choose to do the program or not, doesn't matter to me. But don't make a business decision on your future financially only seeing this one time. I mean, I think I'm pretty good at it, but there's so much I gave you in a short amount of period of time that see it 2 or 3 times at least. And then when I saw this the third and fourth time, I got to tell you, that's when I had a really hard time sleeping at night, because it really, the light bulb went off and I saw a huge picture of this. Because I've been building EXP for about 4 years through their 7-tier structure, and I'm ranked number 200 out of almost 70,000 agents in the entire company worldwide with growth and expansion. So I've had some good skills and practice with building teams of people. I'm doing the same thing now with the RELO program on a much larger, faster basis. Because I'll probably have close to over 1,000 people in my organization within the next 12 months with this. That's how fast this is growing. And my goal is to find like-minded people like yourselves and partner with you and help you do the same thing. Because this is going to happen with or without us. And this model today is growing 3 times faster than EXP is. And nobody knows about it yet. And I asked Eric, I said, how many people are doing this in Phoenix? And he was like, not that many. And I thought that was kind of interesting, because it's based right there in Phoenix. So as far as I'm concerned, this is wide open just in Phoenix alone. Nobody in Phoenix hardly even knows about it. So you guys have unlimited potential of growth with this, not just locally, but nationally. Right now, we're in 43 states, getting ready to be 45. Eventually, we'll be in 48 states across the US. So if you know somebody in North Carolina, where I'm at today, let me know. I'm hosting a big lunch and learn tomorrow here in North Carolina on the East Coast. They could come to our lunch and learn tomorrow. And if they decide they want to join and be a part of this, you would sponsor them. So we do a lot
You're froze up, Chris.
Joke about it because it's a hamster. He's cute, but is that you in 5 to 10 years from now because you don't have passive income? Or is this in you in the next 3 to 5 years?
Chris, Rochelle has a question about disclosures, I think. Rochelle, can you unmute yourself?
Sorry, my phone is blowing up because I've been texting Rob. So yeah, I was just curious, with how do you disclose this to your people, if you're referring a loan officer to, your clients and so forth, does it just feel sticky?
Not at all. I let people know all the time. When I'm officially licensed, my conversation will be very straightforward.
Okay.
Because referral compensation is very standard in the industry.
Okay.
And so I let them know, look, I'm a licensed real estate agent. I'm also a licensed.
Brooke, you're so funny.
There's also a licensed
I
blank.
think the wind behind him because he's in the beach. That's
I
pretty
know,
know.
right?
Chris, you got to take off
You see what I
your,
can.
you got to take off your virtual image. I think it's hurting your internet connection.
Is that it? Hang on, let me stop it. Let me stop sharing for a second. Hang on. Uno of the momento. Let's try that.
We
You had
can
said
see
it-
that pretty hotel room background.
Here's my hotel room. I make my bed. Yeah, I
I
made
was
my
just gonna
bed.
say, did you make your bed this morning?
Woo! Yes, I did. Look at that.
Bed in a hotel.
Did you
That's
make your
amazing.
bed or did the people, the house cleaners?
They're
come
not coming in anymore.
They're not coming in unless I ask them to, and I'm good.
Yep.
I've got plenty of towels and toilet paper. I'm set. So,
Kind of stopped.
um,
You said you were up front and you told them I'm a real estate agent and then that's where we stopped here.
so I let them know. I'd say, look, I'm a licensed loan officer. I'm also a licensed real estate agent. My capacity working with you today is I'm a licensed agent helping you buy your next property. But I have an amazing team I partner with that also services loans for my network. And so I'm happy to refer them to you. And I've got other loan officers that are different companies that I also like as well. So I'm happy to introduce you to all of them. But my company that I'm partnering with, this team that I really like, has some products that other companies are not doing. And I think it's going to help you be more competitive in the marketplace if you go this route. It's up to you. I'm going to give them the options, but they're going to go this route when they see what I've got to offer them.
Yeah, can you talk
So-
about some of those loan programs?
Absolutely. So there's 3 major products here that
Dang you,
people start
Chris.
copying them. And can you hear me?
I can again. You're froze for like half a second again.
I got 2 bars. So here, let me hold it right next to my computer. and
four.
It gives me better signal. I'm still at 2. Okay, so there's 3 major products that I think set them apart compared to most companies out there. It is a matter of time, I think, before other companies get wind of these and realize if we don't do this, we're going to get really behind the 8 ball here. But they have the head start compared to other companies out there. The first one is they have a loan assurance program. Think of it in terms of like it's like a loan guarantee. So when you have a buyer that's going through the pre-approval process with them, if we want to get them qualified for the loan assurance program, they take 6 days to fully underwrite your buyer. If they go through what's called their PYT program or payment, PYT. It's, I just said it today, I just forgot it. Protect your transaction, PYT. It's called Protect Your Transaction. So once they get fully underwritten as a buyer, this is not a pre-approved buyer. This is an approved buyer. They've been fully underwritten and fully underwritten in 6 days. Once they've been approved through PYT, then now Amerifirst is saying, we guarantee we can close a loan for this buyer. All we need to do now is get the house and underwrite the house and we're good to go. So once they get to, let's say they're getting close to closing, and if something happens where for whatever reason, Amerifirst messed up and didn't miss something about your buyer that they didn't catch before, and if it's their fault that they can, for whatever reason, not close the loan that they guaranteed that they could close, they're going to pay your buyer a $15,000 fee for not closing their loan like they promised they could. $15,000. Now, what's interesting about that is if the buyer is dead set on getting this house and for whatever reason, the lend, Amerifirst can't do it, well, they can switch to a different lender and work on getting approved to get funding from a different lender. Of that 15,000, they can take up to 9,000 of that and assign that to the seller. And then use the other remaining 6 as their down payment money towards their next loan to buy the property. That's all negotiable. It's up to the buyer how much of that they want to defer to the seller, but they can do up to 9,000 towards the seller. Now, let's say if you're a teacher, doctor, nurse, police, fireman, military, that whole crowd, they have a $20,000 loan guarantee for that crowd. And they can assign up to 12,000 of that money towards the seller under that type of situation. That's what they call their loan assurance program. So as an agent, whether if you're the agent or referring agents that have the ability to offer this to their clients, they can tell the listing agent, we have a loan guarantee. This is an approved buyer. We guarantee that we'll close this loan, or we can defer dollars towards your seller if we don't.
Well, I imagine the underwriting's pretty strict on that, huh?
They're just, I mean, it's, well, strict from the standpoint of they're not going to do any different than what another lender would do to underwrite them, but they're going to fully underwrite them ahead of time to make sure they will be a fully qualified approved buyer. So now we're just waiting for a house to underwrite and we're done. Which means they can close quicker because they've already been fully approved as a buyer.
Right.
Okay. So that's the loan assurance program. That's the least sexy of the 3 that I've got to share tonight. The second one is they have a cash buyer program. So in today's market, if a seller gets multiple finance offers plus a cash offer, which offer do they like the most typically? As long as the number is still good, right? But cash is king. All right, I agree with you. So as an agent, you can now, there's a couple of pieces of this you have to qualify for in order to do the cash buyer program. But essentially what it means is if you're in a competitive market and you're going to try to get a house and there's multiple offers on it, you can now write a cash offer for your client instead of a finance offer. They have to be able to put 6% down towards escrow towards the purchase price, 6%. They have to have been approved through the PYT program. So they're a fully approved buyer. The buyer section on the contract is Amerifirst Financial and or assigns. As investors, have we ever done an assignment before for a wholesale deal? Have we ever done a double close before?
Yeah.
Basically, we're taking that concept and putting it from mortgage company to consumer buyer. Same concept.
Wow.
So let's say, Brooke, you've got a buyer, you want to go shopping, and you're like, gosh, man, we keep getting beat out. We're getting buyer fatigue. We write finance offer after finance offer after finance offer, and my buyer's getting pissed because we can't get a deal.
Where I'm at.
You're at that right now. So let's say that you have a opportunity now to allow that buyer you're working with to write a cash offer instead through this program. They've got to be at 6% down in escrow. They've got to pass PYT. They check those boxes. You can write a cash offer. You write the offer, Amerifirst Financial and or assigns. This is where we hit the fork in the road. There's 2 different directions on when we write the cash offer. If you're going to write it with 21 days or longer on closing from now, what's going to happen is the buyer's already been fully approved. Now we just got to get the inspections done, get the appraisal done. They can close in 21 days or longer, depending on how you write the contract. Right? We're trying to be competitive, so we want to keep the closing time frame low. But if you do it 21 days or later, then we're going through the normal process. When you get to the closing table, Amerifirst is going to have you get in contact with the listing agent, and we're going to sign an amendment because we're now going to assign that purchase contract to the buyer who's been fully approved to get the loan. And so instead of Amerifirst buying cash for the property, they do an assignment at the closing table, and they tell the listing agent, we've already got full loan docs approved. We're ready to close. We're going to transfer this contract to this buyer, and they're going to close and buy the property today. Sign the amendment, and we're closing. We're doing an assignment.
Almost.
What's that?
So it's kind of a bait and switch almost.
Nope, it's not, because Amerifirst can still buy the property. Okay, but let me explain why, if it's 21 days or longer, it's in your buyer's advantage to do it and to have it assigned to them, because all we're doing is saying, hey, we're closing with this buyer. We decided we're going to go ahead and assign it to them and close this minute, sign the amendment, we're closing. That's if it's 21 days or longer. Okay. No additional cost or overhead to your buyer by doing that. If you, let's say you write the offer for 2 weeks to close in 2 weeks, it's going to take at least 21 days to get the inspections and appraisal done to fully underwrite that loan for that buyer. But let's say you write it for 2 weeks. Still need to do inspections, still got to get the appraisal done. Okay. But we don't have the 21 days. So what's going to happen, this is now like the double close conversation. This is going to be a higher cost for your buyer, but it's the difference of getting the house versus not getting the house. And they're really ticked off after looking at 20 houses and writing 20 offers. They want to get the house. Okay. So here's how it works. Let's say you write the closing for 2 weeks. Amerifirst financial and/or signs. Amerifirst is going to close in 2 weeks on that property. They're going to use their cash, buy it cash, and close. They're going to own the property. A week later, your buyer is ready to close their loan and take over the house. So the buyer is going to have a closing fee to pay when Amerifirst buys it. When Amerifirst sells the property to your buyer, there's going to be a 1.5% fee tacked onto the sale price, because now they use their cash. This is just like transactional funding in a double close. They're going to charge a 1.5% fee. They're going to sell it to your buyer for 1.5% more what they bought it for. Your buyer is now going to close and pay for 1.5% more than what Amerifirst bought it for. And then during the time frame that their cash was in play, there's an 8% interest APR. So they're going to pay a week's worth of APR at 8% while the money's in play. So closing fee here, 1.5% more plus 8%. They got to use the cash to get the property. And they now buy the property from Amerifirst a week later.
Like 21 days or longer. You mentioned an appraisal. Normally, when you present a cash offer, there isn't an appraisal. So how's that working?
No, you can still do an appraisal even if you're a cash buyer. You still have the right to do one. Just because you're doing cash doesn't mean you cannot do an appraisal.
Well, you would, I mean, that's one of the beauties of the cash, is that there isn't an appraisal, and that's why it looks more appealing.
I get it, but you're not having to get an approved loan when you're doing a cash offer. That's what's appealing.
Yeah.
So there's no appraisal waiver, but it's still written as a cash offer.
Correct. That's exactly right. Still got to do an appraisal. So depending on how you write this, how you structure the offer, it depends on, does the buyer get to close without paying 2 closing fees?
Right.
1.5% more plus 8%. Or if it needs to be that competitive to close fast, then there's going to be a little bit more overhead for your buyer, but they got the deal because it was a cash versus financed. That's the cash buyer program. Any questions about that before I move on to the trading program?
I guess what would happen if it didn't appraise? You still got to get that in the 2 weeks, I guess.
No different than if you write an offer today and they still want to buy the property. If it doesn't appraise, it's going to be a renegotiation on purchase price, or the buyer makes up the difference. That's no different. That same process still applies today. All we're doing is introducing some additional tools to be more flexible to get more deals that we couldn't get before.
Yeah.
For consumers. Okay. So any questions about the first 2 programs before I get into the trade-in? Yeah, after I explain the trading program, we're done. That's all I got left. So we're almost there. Unless you got any more questions. The what I'm excited about the trade-in program is, what's our biggest problem in the real estate industry today for consumers? What's our biggest problem we're facing? And for investors, for that matter.
Shortage of homes.
Shortage of inventory. Not enough deals. Anybody care to try to answer as to why?
Mr. Attorney General.
I don't know if sellers are listing their houses.
They're not listing their houses. So let's say, Brooke, if you're talking to a potential client, they're like, you know what, we really want to. I'm just afraid if I list my house, I'm not going to have a house to move to. Right? Or the flip side is they want to go shopping for a house, but they haven't listed their house yet. So now when they find the house they want to get, they've got to write a contingent offer probably. So how are contingent offers being viewed today?
Not accepted at all. Not even
But
looked at.
they're laughed at.
Yeah.
I mean, in all seriousness, they're really being laughed at. It shouldn't be that way, but they are. So you either damned if you do or damned if you don't, right? So now there's this quandary, there's this catch-22. What do I do? This is where Eric got together with his team and said, how do we solve this? And they went through and looked at the average net that a seller makes every time they sell their house. Let's say we got a 6% listing, 6% is coming off the top for commissions. You typically are going to budget 1 to 2% of your amount going towards title, closing fees, prorations, and taxes, and all that other stuff, right? Then there's typically 1 to 2% in incidentals about the property. So Amerifirst said the national average, after they did all the research, they said the average seller nets about 90% of their sale price that they take. So they said, guess what? We'll just get to the front of the line and pass that problem, and we'll just buy their house at 90% of appraised. So how it works is you take your client shopping, whether if it takes a month, 2 months, 3 months, 6 months to find a house, whatever time frame it takes, you find a house. When you write the offer to buy that property, you're not writing it contingent. So you get to write a non-contingent offer. Your seller doesn't have to worry about listing their property. They're not having to worry about getting it cleaned up and fixed up and prepare for showings every day, which they don't typically are not too excited to do. They just, how it's going to work is you go find the property, get it under contract. You can write a financed offer like you normally would, non-contingent. On the day of closing, that you're closing to buy your next house, Amerifirst is going to buy your client's house at 90% of appraised amount the same day. So they get to sell their house what they would have netted anyway. Okay, here's what gets interesting about it. This is when it starts to get exciting. Your buyer sold their house. They got to buy their next house. Amerifirst now owns the property. So they're going to go to the listing or the agent that brought the deal buyer to them to do the trade-in with. As soon as they own that house, they're going to turn right around to you, Brooke, and they're going to have you list that house at 6% immediately. Now you get the listing. So now you sell it. Now in your market, I don't know the answer. Are they selling less than list price, equal to list price, or above list price?
Depends on the price range, actually.
Okay. Mostly what?
Mostly above.
Mostly above. So let's just choose a cheaper house in your market, a $300,000 property. So let's say it appraises at $300,000. They're going to buy it for 90% of that, which is $270,000. So at closing, when your buyer goes to buy their next property, $270,000 is coming at closing to buy their house from them. Now Amerifirst owns the property. Your buyer owns their next property. If it sells for, let's say, 320, 330, 340, anywhere in that spectrum, you're going to get 6% of whatever it actually sells for. Then there's the closing fees, plus any incidentals to get the property cleaned up and ready to go for the next buyer. Is there now equity left over in this pot? Because we sold it for more, right? You would think Amerifirst just made a profit, right? Sounds logical. Who's going to get the money? They take that equity left over and transfer it to the original seller.
No, the seller.
The original owner, the
Yeah.
seller. They get the equity difference of what's left over.
Which they should.
What did you say?
Which they should.
Which they should, absolutely. Yeah. Now, if you're open door, offer pad, you're not getting the difference. Amerifirst says, we don't want that equity. We wanted the loan that we helped you get that you didn't have before because you were stuck in a catch-22. We got the loan. Now, let's say you're a RELO agent. You got your 3% for helping the buy side, plus a 0.5% on the conventional loan amount. Now you got the relist at 6%. So when it sells for 330, you got 3% of the 330. plus the equity difference goes to the original seller. Now it's like we're doing it in
I have to
reverse.
get my real estate license back.
Hey, I got a great brokerage for you to check out. So now we have solved the quandary that people are stuck in, because now you can go market to your network and say, who's wanting to buy a house that's afraid to sell your house? Whatever marketing plan you want to brainstorm and mastermind on, now you can really touch a much larger group of people that are afraid to sell because they're afraid to list or afraid to buy because of the whole contingency issue. What if we can put a marketing plan out there about, hey, go buy and sell, go buy your next house and sell your current property without having to do a contingency? Have I got a program for you? Now we're unlocking people that feel stuck. And if it's super competitive on the house they're going to buy, they can also do the cash buy program to get their next house and do the trade-in program on their current house. And if they had to extra cost to do so, well, if they made a profit on the equity sale of their previous home, that's going to help them make up for any overhead they had on the cash buy program from the equity, additional equity portion that came from the sale of their first house. Oh, and by the way, since I'm talking to investors, they're building an entire shelf of investor products that specifically go into the long-term or short-term rental game. And they're also building out a whole commercial division for doing commercial loans for investors. And they don't sell these. The shelf stays in-house, serviced by Amerifirst. They don't sell them to Fannie and Freddie. So their underwriting criteria gets to be a little bit more flexible because they're going to keep it in service in-house. Oh, and by the way, the owner happens to be right in your backyard. And so all of you guys could get out and meet them anytime in Gilbert, get to know them. And the more you get to know them, the more they like you, the more they get kind of a little bit flexible on how they underwrite your loans. Somebody's smiling.
We're not supposed to know that. Come on.
I know the whole leadership
Those
team.
underwriters are supposed to be doing their due diligence no matter who you are.
If it's their products that they're not selling to Fannie and Freddie, they have more flexibility because it's them making the decisions, not Fannie and Freddie guidelines.
Right.
How many agents and loan officers would like to have this kind of flexibility to go do more business, create more business that they couldn't before? How many agents want to make 0.5% on their loan referrals and they're doing for free today and build passive income and have all these loan products and go do more business because people are stuck today and now they're not? There's a lot of things that got solved with what they were putting together. So I'm pumped about it. So all we're doing is telling all of our close buddies first before we start talking to people that we're not as close with. Any questions? Any thoughts?
So who are these people? Oh, sorry, Brooke. So who are these people in Gilbert that we need to get to know?
You want to go get to know Eric Bulby? Maria and Liz already know Renee. She's an absolute stud. It's fun to meet her at a bar first and then go meet her in the office. She's a total rock star. She is.
I already heard about her from Liz.
I have never met somebody like Renee in my entire life. She is definitely a one-of-a-kind person. She's got more energy than a nuclear reactor. She seriously does. And she's the biggest giving person. I mean, I could have her hop on the Zoom right now and she could say hi to you if you guys want to meet Renee really fast.
Not so
Yeah.
special, we didn't need a platform yet.
Did you get an answer to that insurance question, by the way?
Let's see.
They wanted to get rich together and I let that fool me.
Okay, so Eric responded. He said yes, but there's a whole other set of rules. I don't know what that means. So I don't know what that means, but the answer is yes.
As you see my work product, my company, me, as yours to do it as you see fit.
Roberta, you got a lot of background noise going on over there, girl.
Do I?
Make sure you don't say anything on the down low.
Chris, what's the cost for the program and for the test?
So it's free to join Amerifirst. No cost to join. The only thing you pay for is the cost of your class. And it varies by state. For when I did my Missouri, Kansas, I paid $244. You get a 30% discount through Amerifirst. So when you register through Liz or Marie's link, however you guys work that out, you'll get a welcome email that gives you the whole packet. And then when you register, you're going to go to the NMLS website and get your NMLS number. You're going to register. It's free to register to get your number. And you take that number and go back and apply to get your class started. And so you have, the only thing you pay for is your class. So if you're starting out in Arizona, you're going to pay for the Arizona course. Marie, what did you got? What did you pay for yours?
No, it's like 240, 295 maybe, or 250, but there's an important code you have to get off the letter that's sent there that you have to use when you join the NMLS program. You got to get that code off of there, because one, it gives you a discount, and two, it's how you track with your team.
Is it a time test?
You could.
Did you ask if it was timed?
Yeah, so once you buy the package, you have a certain amount of time to study and take the test, or?
Once you start the program, you can buy it. Well, you can buy it, but you have like 12 days to finish it, or you have to sign up for a certain number of days.
Correct.
Or a certain program. There was a couple different programs you pick.
Right. You can either do the 5-day or the 12-day. It's either one.
Yeah, I did the 12-day and it's 20 hours. I completed it probably, honestly, though, in like 5 days anyway, but I still signed up for the 12-day just in case I needed some extra days. But I think I still have access to it, and I finished it and then I went and took the test.
Is it all online?
All online.
And do you pay extra for the test?
You do pay for it. There's a test fee. You have to pay for the state, the
Okay,
national
so
portion.
that's through the
It was like
state.
$110.
Yeah.
Okay.
Course is like around 250-ish, give or take, or 290, depending on your state. 110 for the test.
So question, if you are not a realtor,
Mhm.
but you've been thinking about it, would you join the real estate? Would you do it? I can't even speak.
Like which order would you
be
do?
an agent first or do the test first? For the.
That's a great question. I honestly think it comes down to, what are your goals? What's your purpose for getting your real estate license? What's your purpose for getting your RELO license? Obviously, RELO, to me, is just kind of a no-brainer, just because we're already taught as investors to how to build networks of people.
Mhm.
And we know lots of people. If I built, let me share my screen really quick. I just pulled up a Word document that I want you to see, that all of the different resources and people that you can refer to this model. So let me expand my screen.
Yeah, the only
You guys
thing
see
that I
that
would
okay?
point out also is that it's a lot longer to take your real estate license.
Yeah.
A lot longer, a lot more hours. So if you
Mm-hmm.
wanted to just do something quickly, the RELO program is definitely a lot quicker and easier. I think.
Okay.
Yeah. So here's the network of people that this applies to, because this is much larger than what I just do with the XP on you bringing agents to this model and partnering with them on it. Here's the audience of people we can bring to the RELO program: real estate agents, loan officers, insurance agents, title reps, attorneys, home warranty reps, financial advisors, financial planners, CPAs and accountants, home inspectors, home builders, contractors, corporate recruiters, real estate investors, hello, property management people, stay-at-home parents that can just literally do recruiting through LinkedIn and Facebook. And if you're an entrepreneur and you see the vision of this, making multiple 6 figures or getting to the 7 figures passively just by affiliate marketing, that's our network of people we can invite to check out this program. Much beyond the average agent in LO, because all of these people have large networks of real estate agents referring loans and doing real estate sales. You know, you think about the average LO. I talked to an LO today here in North Carolina. I had lunch with her, blew my mind. She's been a loan officer for 30 years. And I asked her this question. I said,
this sentence is grammatically.
Liz, what are you listening to? You're not muted.
I know. It was the link. Sorry for the testing stuff. I'm just trying to.
It's kind of getting in there with you a little bit for a moment. It's just kind of cool. But I asked her, here's a 30-year loan officer. She's kind of getting up there a little bit in age. She's probably pushing late 60s, maybe early 70s. And she's still cranking away loans just like she was 20. But I asked her, I said, what is your exit strategy from hanging up your LO license and retiring someday? And she looked at me, and I didn't ask her what her age was, but I could tell she was north. And I said, what's your exit strategy? And she said, I don't have one. And I showed her this program, and she was ready to sign up on the spot because she got it and it made sense. So I just, you got to be real on the life expectancy. When's the last time you've seen a real estate agent or a loan officer retirement party? These people work until they die. There is no retirement party. They don't. They just don't. There's no exit strategy. So now we're able through this model to give them a real exit strategy. It's not a get rich quick. It takes time to build this up. But okay, if we're talking $700,000 in passive income, how many rental properties do you got to have coming in or in place, cash flowing, versus referring a network of people to make $700,000 a year in passive income? It's a lot. I mean, I've got a decent rental portfolio. I mean, when I looked at my corporate income that I made back in my days, my rental portfolio today equals what I make in corporate previously. So I've replaced my corporate income with my rentals in Kansas City. But just with EXP, I've more than 5x'd my income in rentals with my income I make from passive income from EXP. With the RELO program, I think I can double, triple what I make from EXP with this model in the next 12 to 18 months. That's what I see, because this is a much bigger, broader, larger picture of what we got access to just from looking at this list. I talked to my home inspector the other day just to test this theory. And I said, how many agents do you have in your network? He said 300. I just looked at my database yesterday. 300 agents. How many of those are buyer agents? He said, every one of them, because I'm their home inspector and all the houses that I'm helping them buy. And I said, wow. I said, do you have the ability to make passive income in your industry? And he said, no. He said, but I'd like to. I just don't know how I'm going to do it. And I said, how many agents do you work with do you think might refer to lenders to their clients? And he said, probably all of them. And I said, how would you like to make passive income on helping the agents that you know make 0.5% on all the loans they're referring today that they're referring for free today? And he said, wow, I bet all of them would probably like to hear about it. And so he had 300 real estate agents that he could refer in his network that I'm going to help him do and help him actually make passive income, because he's got a network of people he knows that are already doing this business, but they're just doing it for free. All he's got to do is take a 20-hour course, get licensed, refer his network, and make passive income. How many home inspectors do you guys know?
Yeah, Chris, there is some rules on how we market this, right? So can you go over real quick, maybe what some of those restrictions are?
I'm not the one to answer the questions because I don't know. That's going to be a Renee question.
Okay.
So I've got the team. I just, I could,
Because I
they
know
can
we can't
actually
be
do
like
some.
blasting on social media, like, hey, do you want to earn?
I wouldn't ever recommend doing it that way, because for me, this is a relationship-based opportunity. I think it cheapens the model and cheapens the program if you just try to blast it like that. Because I've seen people in my market do it, and I saw, okay, let me give you a real life example. So one of my buddies that I sponsored here in Kansas City, where I live, she went to social media on Facebook and said, hey, real estate agents, if I could help you make a referral fee on loans that you're referring today for free and get paid 0.5% referral on those, would you want to learn about it? She got eaten up in social media so bad that I was like, please take your post down, because every loan officer out there started telling her what you're doing is illegal. You're going to get in trouble. You're going to be arrested. I mean, she got destroyed. And it's because they haven't seen the model. She didn't go back and explain to them, hey, you're getting a license to become a licensed LO so you can legally and RESPA compliant get paid a referral fee. She didn't go into any of the details that makes the magic work on this program. And so you can't articulate this whole thing in a Facebook post. You can't. Talk to them. I've got simple little scripts. If you look at, here's my script. In this document I built, I'll send this to Liz and Marie so they can have it. All I do is I say, hey, Susie, if I'm calling them, this is my conversation with them. Hey, Susie, I got just a minute, wanted to give you a quick call. I was thinking about you, want to ask you a quick question. How many buyers have you worked with since the beginning of your real estate career? You know, some people told me 5, 30, 50. I've had somebody recently tell me over 1,000 in the last 20 years. They've worked with 1,000 buyers. Whatever their answer is, great. Did they already have their lender in hand, or did they refer the lender to them to get pre-approved to close their loan? And I'm hearing on average, 90% is what they referred. They referred the lender. And I'm saying, great, what'd you get paid on those referrals? I already asked this to Brooke earlier. Same conversation, right? Okay, great. What'd you get paid on those referrals? Nothing. Okay, I know. You can't get paid traditionally on a referral fee from a lender. However, what if I could show you a way to get paid 0.5% up to $2,500 on all conventional loans that you're referring to lenders today, now through the rest of your entire real estate career until you retire, that's legal and RESPA compliant? Would you be interested to learn more? Well, yeah, I might. I've never had anybody tell me no. I had one person say, I'm so busy right now, get back to me next month. I haven't had a no yet. And all I do is when they say yes, I'm inviting them to either the Tuesday Zoom meeting or the Thursday Zoom meeting. That's back before I didn't know how to present this. Now I know how to present. So I'll either set up a time to present it myself, or invite them to keep it simple to the Tuesday or Thursday meeting. Once they come to the Tuesday, Thursday meeting, I'll follow up and say, hey, what'd you like about what you saw? And then we'll pick up the conversation from there. I'm batting 98% on this so far. Now, I've got other agents on my team that are batting almost 0. And here's why. They're not following my system. They're trying to tell them everything they can about it in the first phone call, and they don't even know how to present it. So they're butchering the conversation. I keep it simple. Just invite them to come learn about it from somebody that knows how to explain it. Let them do the heavy lifting for you. That's it. That's all I'm doing. So if you want to invite somebody to come check out the model, go to relomatrix.com and register them for the next Zoom meeting. If you want to get more details about the model itself, go to a different website, call it relofunding.com. There's a lot of good Q&A on there, relofunding.com. Here's my script for a loan officer. Hey, if I could show you how to dramatically increase your agent loan referrals to your pipeline that are very loyal to you, would you be interested to learn more? Yeah. Okay, great. I've got a Zoom meeting. I'm meeting with some of my partners on Tuesday at 5 o'clock or 2 o'clock your guys' time. We're going to go over the details. I'd love to have you check it out with me. That's my conversation with a loan officer. I'm not saying a word about RELO, Amerifirst. I'm not saying anything about anything. I've got a program. If you want to learn about how to get more referrals, I'd love to invite you to learn more about it. We've got loan officers coming because I keep it simple.
Yeah, and then those loan officers are jumping on that call. And then if they do want to sign up, they still end up signing up through your link, right?
Correct.
Okay.
And then they move their license over to Amerifirst and then underwrite all their loans under Amerifirst. And there's another side benefit to that is like here in this market in North Carolina where I'm at right now, there's not a local Amerifirst lender. Now, the one I met with today, I'm pretty sure she's going to become the first one because she wants to capture all that business that's going to be coming. She wants to be sitting here welcoming that business coming in. As the agents that I speak, I'm speaking to probably 30 to 40 agents tomorrow about this program in a lunch and learn. Those agents come on board, there needs to be an LO to service that blue column. Or there already are that are licensed to do loans here in North Carolina, but not somebody in this market that I'm in right now. So they want to know who's local. So she wants to be that local person. You could bring on other LOs in other markets, and they get to also pick up business from other agents that are coming from other matrix referral systems, even if it's outside of your matrix that you're building, because they can become a referred lender for other groups of people too. They can win that business as well and add that to their pipeline. So lots of opportunity, huge amounts. What other question you guys got? I know we're kind of going a little bit long, but I'm here for you, and I'll keep going as long as you want to talk.
I have a question. Say you finish your training, you get signed up for this. Is there, does Amerifirst provide any kind of like trainings or scripts or anything to help you start your marketing, or are you pretty much on your own?
When you're saying marketing, are you talking about as a RELO agent to build your network and your team and business?
Well, it just in general, like just getting your link out there to, other agents or, just getting started.
So you're not on your own because you've got me, Marie, and the whole crew at Amerifirst to help you.
Okay.
So, but corporate is there to supply the products and all the services and everything that we can get access to. I will be one of the leaders to help you grow this personally and to help coach you, train you, show you the ropes, all that stuff. Now, Renee and her team, they do a lot of hand holding to help you walk through the entire process too. So there's multiple layers of support that you're going to get.
Okay, so you're not just, it's like, okay, I signed up, take the test, I passed, I'm good to go, and not just left on your own. Figure it out.
You got it.
I've already reached out to Renee too, because when you get the welcome email, there's a bunch of contacts on there anyway for people for you to talk to, including Renee. But even like I took the course, I passed the test, and then they're like, contact this person. And I'm like, hey, did it. Now, next steps, like hold my hand, walk me through it. And so they've, already emailed me back and said, okay, this is the next steps. Like right now, she just gave me the heads up. She's like, well, every year there's a renewal period. And it's from November 1st to December 31st. So she's like, instead of getting you, fingerprinted, background checked, everything right now, if we wait till the end of the month and you get approved in November, it will last your license until the end of 2022, instead of you go through it now and it only goes to the end of 21 and then you got to renew for 2022, right? So like they know all of the inside tricks, secrets, everything that's going on in this industry. So yeah, they're there to help us.
Do you know if you have to do, you mentioned you have to renew every year. Do you have to do CEs?
8 hours every year.
How many?
8.
Okay.
And if you don't, there's a whole slew of things that can happen to you. Like taking the whole thing over again.
You have to do your 2022 or whatever. And before I had a CPHT certification, I had to do 20 every 2 years.
Eight is not a lot, Wendy.
No, it's not. That's nothing.
Yep. You can knock it out in one day, basically.
Yeah.
So if you already have your background check and fingerprinting, then that's just one less step you have to worry about, right?
I believe you got to go get the fingerprints again because you're going to a different, unfortunately you have to, even though as your licensed agent, it's just that you're running it through their funnel versus going through the real estate brokerage funnel. So
Not the background check.
not that I'm aware of, no.
I thought it's like when I went and got my license, my fingerprints done for my real estate license, that was for the state.
Right.
What's for the brokerage?
This is for a national license that you're getting. Even though you're initially getting it in Arizona, it's actually a national license.
Yeah, it's through like a federal database that they want to do a background check.
FBI. Yeah.
Can you have a real estate license? Sorry. Can you have a real estate license in a REO license at the same time and worked within at the same time?
Absolutely. In California, everybody has their loan officer license and real estate license dual. They're dual licensed. Almost everybody in California is. So very common. Great questions, guys.
So much to think about. It's really exciting though. I think there's a lot to digest. And like you had said, watching it 2 or 3 times because there's a lot to digest, especially with all the detail you gave about the programs and the product, that's offered.
I'm gonna do something really quick just so I'll help you with this real quick. Let me pull up and look at something. One moment.
Well, it does make sense because like, you know, if we are moving houses, like it does make sense to get all the juice, squeeze the orange all as much as we can because, you know.
I love that
so much to
example.
do.
I mean, that's like eating the rind and everything. I love it.
No waste.
No waste. You're getting all your money's worth here.
Actually, that list that you provided too was super helpful. So if you can send me that document that you put together, Chris, with your scripts and stuff, because, you know, there was definitely a couple of things on there that I wouldn't have thought about before, but, you know, reaching out to inspectors and other stuff. That would
Check
be
out the chat I just put out there.
cool.
You guys can download that link, and that's my Word document I just pulled up. That's got my script in there. It's got the links in there. It's got the 3 examples of the programs I put together or that they put together, documented it all. It's all right here for you.
Nice. Janet Isidro was on here before, but he dropped off. So if he has any questions, you tell him to let us know.
Yeah, I texted him, but he was at the gym, so I guess he couldn't connect. So he took the class this week. So
For his real
he
estate.
definitely needs to listen this.
Yeah, for his real estate license.
No, for the mortgage.
Oh, he did.
No, that was not, that was, yeah, he did he took the class, so now he has to take the test.
Okay. Yeah. Well, he can ask me questions about the test too, because I passed. I'm going to just keep doing this to Chris. I passed.
I'm so proud of you. My little West Coast New Yorker.
No, but can I just tell you what happened though? Just 2 seconds, guys. I showed up at the testing center, okay, at like 7:40. They tell you get 20, 30 minutes early. It's 8 a.m. test. I get there, it's like 7:40, but there's a few people online. So I get up, I'm finally talking to the guy. It's like 7:45, and same thing with everyone. It's like, just put your license here. And then if you wear glasses, you got to take them off. They wanted to inspect your glasses, make sure you're not cheating. It's crazy. But anyway, I pull out my license. And for any of you who don't know, I still have a New York State driver's license. So the guy looks, he like pulls out some paper from this back thing and he's like, sorry, that identification is not going to work. Do you have a passport? And I'm like, yeah, at home. He's like, sorry, New York is one of the 5 states we're not allowed to use that ID as license for this federal exam. And I'm like, okay, I'm at a testing facility. There's probably 20 different tests going on here. So I'm like, are you sure that's for the NMLS, you know, mortgage loan originator test? And he's like, yep, sorry. I'm like, okay, so if I run home and get my like passport, I can come back and be a little bit late and still like get in and take the test. And he's like, we give you a 30-minute leeway. So if you can be back by 8:30, you're fine. So it's 7:45. I'm in like up near the airport and I live in Ahwatukee. And I'm like, I got a 20-minute drive just to get home and 20 minutes back. But I'm like, okay, I call my husband. I'm like, meet me on the side of the I-10. Like grab my passport. I'm coming, like we're rolling in hot. I just want to get off, grab the passport and get back on the highway. I get back down 143. I'm on the Broadway curve and I get a phone call. I answer it. It's the lady from the testing facility. And she's like, sorry, the guy doing check-in just started a couple weeks ago and he thought you were here for a different test. Your New York State driver's license is fine. You can come back. And I'm like, no, are you sure? Because my husband's coming. And she's like, no, you're fine. Just come in. We'll get you tested. So I'm like, okay. So just so you guys know, if I wasn't nervous already to take the test, like in the middle of the test, my stomach was just like, blah, 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 blah. My nerves were shot. I like got back there at 8:15 and needless to say, I was happy my brain worked enough to pass the test because it was.
Wow. So if you can do it.
Anyone can do it. Anyone can do it. You guys can do it.
Anyone can do it. Yeah. Marie, giving me hope.
What? Wait, you're
What?
He was freezing. I don't know what he wants me to say. Come here. Come say hi.
It's almost like a drunk game we're playing, except we're not drunk. That's the problem.
Did mommy study a lot
Awesome.
before I took the test? Yeah. What did I stayed up here for like 5 nights in a row and I was like, sorry guys, mommy's not playing right now. I'm studying for a test. Right?
Yeah.
And
But
then I
see,
told
your mommy's going to get to take you on a lot more trips later because she did.
do I take you on a lot?
Shopping.
So I told him I passed and he's like, but what % did you get, mom? Because he knew I needed a 75 to pass. And I told him I said an 87. He was like, all right, you did okay.
Love it.
Oh, wow.
Way to
Look
be
at
supportive,
Jose.
guys.
Hola.
Hola,
There it is.
¿cómo estás?
Bien, ¿y tú?
Sí,
No, muy bien.
muy bien. I have no idea.
Awesome. Muy bien.
Muy bien. All right. All right. I'm going to go put these handsome boys to bed. Chris, thank you so much for this presentation.
Yeah, thanks,
Welcome.
Chris.
Thanks, Chris.
You are welcome.
Obviously,
Thank you.